Good evening, everyone. Hope you guys are having a wonderful Thursday, December 15th, 2022. Don't know why I felt the need to repeat the date, but hey, need to let you guys know what day it is, I guess. Overall, pretty shit day for me as far as trading goes. Um, just for some reason couldn't get it together. It might be the lack of sleep. And yeah, so we're gonna just try to make this brief, try to make this quick, uh, review what occurred today in the market, and then review what what kind of trades I took. They weren't the best, if I'm being honest. So let's go back and let's look. Currently looking at the December contract still because December contract has all my destinations on it, and as of right now, it's still valid. Price is still moving. Volume might be a little bit lighter and a little bit different. Price is a little bit different than the March contract, but we're going to look at the December contract out the gate just to kind of give you guys a reference of all the destinations that we took out today. So, yesterday we put ourselves back into a balance. You could have called it a three-day balance, a 2-day balance, however you want to look at it. Either way, today we opened with a gap, held the gap, and then took out the daily balance low, putting the daily back to one time frame and down. After we just came out of balance to the upside, one time frame and up, emotional trading puts us back to one time framing down. And one quick note, um, and this is something that uh, my mentor has discussed in the trading room, and then those that are familiar with Jim Dalton's work, uh, have also discussed this concept. But let me review it real quick. For those of you that don't know, I typically I base everything off of profile and like how it shapes out. So let's look at the daily real quick. Let's look at our daily. Let's expand it up a little bit. So the daily since this day right here, this large green candle that you see, since this day, and actually let me go to the weekly. The weekly looks a little bit cleaner. I'm gonna show you the weekly. The weekly looks a little bit better. So if you were to ignore all this over here to the left side and just focus on this big green weekly candle, right? And then you look at what it has occurred here, and we've put ourselves into like a 5 week balance. And what this balance looks like is a P shape. Uh, P shape typically in the profile world looks just resembles uh, just resembles a short covering rally typically. Uh, and then a B shape. So if you look here, it kind of looks like this is a stem, and then this would be a P, right? Uh, so that's kind of what they've looked at, is this might be just a large P shape in the making, with this balance being here. And if we break the balance, then we should come test the lows. Uh, and then, if it were a B shape, kind of like here, from if we're using these 2 days as a stem, and then here, just be long liquidation, just basically meaning shorts pushing down. P shape, short covering rallies look like P's because you have a stem that pushes up initially and then you trade sideways with a large point of control in between. Uh, and you can kind of see it on the daily as well. A little bit here, right? This P shape right here using this day as the stem. So a little wacky, something interesting to point out. And one thing to note about it is if you were to treat this like a normal intraday P shape, then what happens when shorts begin to cover or quit covering their positions and the bid removes itself from the market? Well, you get what happens today. You get a gap down and long liquidation, and we come into a B shape, which is what today looks like. So with the gap down, with today's gap down, we finally got that afternoon pullback low and where the single prints started and filled back from the 12th. And then we took out that daily low from the 9th, and then the other daily low from the 7th, and then that other daily low from the 6th. Finally got the 17th low, that afternoon pullback low from the 10th, and then attempted to get the 10th low of day where the gap began, but we didn't quite get there. So we took out all these destinations to the downside with the gap. We hold the gap, uh, B shape. If you look here, let me go to the other contract so you guys can see it a little bit clearer. H23, boom. And if you were to look just strictly at this profile, you kind of see how it looks like a B, right? Like a lowercase b. That's for long liquidation. So this is just a B shape, pretty textbook B shape, from my understanding. Textbook B shape, nice round bottom, traded in between value low and value high, create a decently wide point of control. I believe point of control is 1, 2, 3, 4, 5, 6, 7. Only 8 wide, so nothing significant, not real wide, but a point of control not to ignore up here at 31.25. Decent point of control there, or where mean is, just basically meaning we came back and forth through that price multiple times throughout the day. So after we opened up with the gap, right, we got below the previous day's low at 39.97. Previous day low at 39.97. I said if we take that out, then you have a good chance of getting these other daily lows at 69, right? So we took that out. We kept pushing lower in A period, kept pushing lower. B period, the second 30-minute candle pushes down, takes out the first 30-minute candle's low, and we just continue to one time frame down. Pretty much the remainder of the day, basically just meaning we're making lower highs and lower lows, tempting to go trend down. We actually went trend down in D period, held a very small set of single prints there in D, and E, F, and then finally in G period they pushed up and filled it. I was actually short during this time and I got stopped out by a literal tick. So I was shorting around 30s and 28. So price was around 39.28, 39.30. I was shorting around there, and I said if it gets back into B's range at basically 39.34, I have my stop there to get me out because if that happens, then odds are to come back up and maybe take out that previous time frame's high. Well, that did not happen. I mean, it happened to an extent, but not quite as much as I thought it did, or it would. It didn't relieve as much short pressure as I thought because once we had supply here and it got filled with that demand, we pushed up to 39, 34, 25. I got stopped out by one tick, and this thing rolls over and has a reversal bar. I'm not upset at the fact that this thing decided to roll over after it stopped me out. I think the trade idea was a good trade idea, and I followed my process, took the loss because this thing could have. There was nothing stopping it from pushing all the way back up, and then maybe back up to the opening. Right? We've seen days like that where it just kind of flip flops, and we just become extremely rotational with a large range. That was very well possible, but we literally take it out, have a reversal bar in G period, and yeah, the rest is history. After G period, I decided to get short in H near the lows after we made a new low in the day. I should have gotten short right away as soon as we taken out G period's low here at 39.15. So, I'm looking to get short. I should have been getting short right here at 39.15, but I didn't get short until right in here at 39.10. After we had already made new lows on the day, I was thinking, all right, we have good chance of going and getting into that gap below. Potentially, since we're one time framing down, we look to want to go trend again. Well, we push back up. I get stopped out of my position. Actually, stupidly, I had a very large size position on because two things. Uh, Emotional trading got to me. Lack of sleep. I'm going to blame that one as well. Sleep is very important, and if you don't get enough of it, then you're gonna make dumb decisions like I did today. So I set a very wide stop. I didn't. I took the short down here at 39.10, right around this region, 39.10 area, and I had my stop back up here at 22. Let's just say 22. So I have a 12 wide or 12 point stop. I believe I had my target set down at 3,900 and then another one down at 3890, which would have been, pretty good into that gap. And I should have known right away that there wasn't much tempo on the day. Every time we pushed down and attempted to go trend, we failed. What was going to be different about this time? And that's exactly what happened. So, I held through these next two time frames, and then finally in K period we popped up, and I got stopped out pretty good. And then L period pushes up. You know, I decide to take another trade, another short. I get stopped out. It was just a bad day. I didn't make money until M period, and it really wasn't the best risk reward trades I've made. So, with that being said, just FOMO, bad trade location, um, very bad risk reward trade opportunities I took. Even though shorts were clearly the play, I just didn't pick the best visual spots. Like I should have waited until the next time frame for us to push up against this candle's high, take the short against it, and then out above it. Same thing here in J period. So in I period could have taken that trade. Same thing in J period could have taken that trade and it probably backed off obviously as it did. And could have gotten out for a few points. So my trade expectation, risk reward, and my stop being too wide, those are bad. That's just a bad recipe for taking for a loss. You're going to take a loss if you and so like I had my expectation. It was. I mean, what in my whose right mind thought we were going to go down to 38.90? You know what I mean? We were struggling to make new lows on the day, and every time we did, we came back in. So I should have just read the room, seen that happening, and decided and taken my profit. The funny thing is, I had a little bit of profit on the table at 39.08 and could have taken it off, but I chose not to. I was a pretty large size, and it hurt me pretty good on the pushback up. Something I'm gonna be fighting back over the next couple weeks. Um, and then hopefully coming into the new year, I quit with these dumbass mistakes that I make because I'm tired of not making the same mistake over and over, but doing things where I know I shouldn't, taking trades where I know I shouldn't, just letting FOMO get to me. That's going to be the big goal for this next year is FOMO. Try not to have fear of missing out on a move and just trade what's in front of me. Um, but yeah, pretty much B shape, long liquidation. We hold the gap. We stretched the weekly balance low. The daily went from balance to one time frame and down. We'll see what occurs tomorrow as tomorrow's ex dividend and quadruple witching, if I do believe. I think I'm correct on that. And yeah, let's go ahead and chart what we have here, and we'll call it a day because I'm very frustrated with myself. Something I just it's tough, man. It's for anybody that's a trader out there. It's a tough thing to deal with whenever you take losses on something you know you shouldn't be trading. So this is where the gap starts. Actually, this is where the gap would fill. Excuse me. Gap fills here. High day, 12:15, gap starts at 85.50. Nope, excuse me, 85.25 is the high of day today, not 50. Then you have today's low. That's literally it. Today's high, today's low. No afternoon rally high, no afternoon pullback low, no wide point of control. Just today's high and low. That is it. So that's all only things you have. The only two references you have to lean on tomorrow is today's low of day and today's high of day are the two references. So if we take out today's low, then you look to trade down into the gap below. I don't have it marked on here because this contract doesn't go back that far. But if I were to go switch back, you'll be able to see that low of day 38.70.75. Um, you'll look to trade that if we take out today's low. If we take out today's high, then you look to fill the gap and maybe get back into the range. Let's look at the larger time frame real quick so I can show you what I'm talking about as far as stretching the weekly balance. And then we'll go over them. We'll go over all three time frames. Screw it. Let's see here. I know these videos probably don't make sense to some people. Uh, Hopefully somebody finds amusement out of my rambling. All right, so let's look at the monthly. Monthly is in a large balance, right? This whole region, I'm tired of that little arrow being there. Why does it select every single time? This large region is our balance, what I just highlighted. This whole range is our balance. Trading in between this range in this channel, as some people would call it, all a bunch of balance. Market waiting for more market generated information. Weekly, believe we just stretched our 5 week balance low. We'll see tomorrow how we close. If we close lower, then we might call the weekly down. Um, that's something I was kind of looking at today. I even asked in the group chat with Paul to see what his take was on it. If we were just stretching it, or if the weekly's down. He said he's going to wait until tomorrow, and I think that's a good idea to kind of gauge tomorrow how we close, whether or not if we close back into this 39.1375 range, or do we push lower and then maybe begin to one time frame down on the weekly. So for right now, this is our balance. Also, not to something that's noteworthy. This is an outside week down. We took out 2 weekly highs. 2 weekly highs were taken out, and we've taken out those weekly lows. Something not to ignore. Like I said, big P shape. Once the bids get taken out the market, what's going to happen? This bad boy is going to roll over. Another thing, the trend of lower highs, lower lows. I mean, it doesn't get any easier. So if you're a swing trader and you took a short up here, you know, you have pretty good risk reward. You might start to take some profits on the way down if we begin to continue to one time frame it out on the weekly. Daily went from 3 day balance. I wish this thing would zoom in. We went from a 3 day balance, calling this whole section here this whole section our balance area, right? And then we finally take it out today, so we're one time framing down, looking to get into this gap below, right in here, where the 50-day moving average is at, just above where the gap starts. 50-day moving average is at 38.7725. So we may look to back test that. If we get below it and find acceptance below, then you'll look to trade this gap. If we don't trade, or it won't be easy to take that gap back unless there's a large amount of supply in the market. With all that being said, ladies and gentlemen, Hope you guys stay safe out there if you're trading. Use stops. Don't do anything stupid. And once again, I do appreciate anybody that does watch these videos all the way through to the end. If you don't mind, leave a like and leave some comments below on how I can improve, whether it's trading advice, psychological, and or just something that pertains to the video and how I can make the quality better. Please let me know. We'll catch you guys in the next one. Thanks for watching. We'll see you.